Traders, what's happening? Welcome back to another week. It's now the third week of March, and boy oh boy, was last week a tough week. I mean, the markets moved last week, but just finding opportunities to get into some trades was a tiny or tad bit difficult, but it is what it is. It's a new week, a very long year ahead of us, and we all have to understand that we're going to have upswings and downswings as part of our business. So let's just move on. This week we'll be looking at 11 pairs. I didn't do it yesterday because it was Mother's Day and just wanted to spend some time with the family. And I guess as the markets haven't really been giving us an indication of currency strength, I thought it would just be best to do it on Monday. And here we are. So these are the 11 pairs we're going to be going over. Pound USD all the way down to gold. And make sure that I'll timestamp the video so you can skip to the ones that you want. First pair we'll look at is Pound USD. Now, we know the pound has been pushing for a very long period of time, and it kind of looks like it's come to an end. We can see that for the first time in a very long time here, we have this break of this brick wall. Since early February, all the way up until the end of February, price traded above it, and now this break below indicates to us what we would anticipate as a potential reversal, so looking for sells only. Now, as you can probably see here, the markets have just gone into a big old range. We're moving sideways. The behavior of the market is not indicating to us whether the bulls are in control or the bears are in control. And what I would say the best thing to do is just wait patiently for strong momentum to enter the markets. We're looking for a break above some of these key levels here around 400 in anticipation of price coming back to some of these levels here at 41.78. Now, if price doesn't break these structures, we're still in a range. I wouldn't advise selling from these levels or buying from these lows here unless you are a range bound trader. And if price doesn't break above for the buying opportunities, then you just be looking for sells below, let's say 3,800 back down to 36.93. Now the ranges are really big, so I guess once you get into a trade, especially trading GU from an intraday basis, 10, 15, 20 pip stop loss will definitely give you good targets of 1 to 2s and 1 to 3s back to some of these highs and back to some of these lows here, as we have a 101 pip move back to the downside as well. I'd say wait patiently, guys, and don't try to jump in and anticipate what you think the market's going to do. Let it speak to you first, let it react to a key level, let it break a key level, and then once there's some certainty of whether the pound is going to continue on with its strength or the dollar is going to start recovering, and we see this market go down. The next pair that we'll take a look at is Pound Jpy. Now we can clearly see that the pound again on this pair has been pushing to the upside for a very long period of time. We haven't really had a strong exhaustion. It really has just been rallying. Now we've got to the key level here at 152.24. We're seeing price failing to break above some of these structures. Now this could be a sign of a reversal, but not yet developed. That's why now I think the best plan of action is to wait for this brick wall to be broken. We can see as long as price is trading above these levels, you were good for buys. Now I'd say we need two confluences. We'll need to break below this brick wall here to confirm that our soldiers can move or are starting to move to the downside. Then you want to see a level here where the higher low was formed that made the previous high around 151.25 to be broken. Then you have two confluences there of price breaking structure, and then you just wait patiently for the exhaustion, the retest of 151.31, and then you'll be looking for a continuation to the downside. Now, let's say the markets decide that they're not going to reverse, we're going to continue to have pound strength, then you're just simply being patient and waiting for 152.24 to be broken. Again, wait for the clean break above this structure, look for the retest, and then the continuation here. I'd say this is the only two plans that you'll be looking for on Pound JPY this week. The next pair that we'll take a look at is Euro JPY. Now, again, this market has been trending up. Then we went to a range, then we started to trend up again, and now it looks like we're being trapped in a range here. The way I see this is a structural high, structural low, structural high. Once we start to see price tapping into levels to the highs twice and to the lows twice, we now can anticipate a very clean range. The only thing I'm waiting for here is the reversal to be confirmed with a break below 129.99. Once I get that break, I'll be looking for a retest and a continuation back down to 129.48. It's a 48 pip range here, so it's a really nice range to look for intraday sells with at least 7 to 10 pip stop loss. Looking for targets of 1 to 1 for break-even trades, 1 to 2, 1 to 3s, and even in some instances 1 to 5s. If we don't break close below this level here, then I'll just be patiently waiting for price to break above as part of this continuation of this uptrend, above 130.44, let's say, looking for a retest and then a continuation to the upside. There's no targets here that I'll be working with, so just focusing on break-even trades and then targeting your targets as part of your plan. And that's the idea behind Euro Yen. The next pair that we'll take a look at is USD Cad. You can clearly see here that this market has finally broken the range. This was a key level last week that we were looking at, saying that if price breaks below this level strong and closes, we'll anticipate price to get back down to some of these levels here around 24.81. That's exactly what's happened. And while the market is making lower lows and lower highs and lower lows, the idea is that price will continue bearish. This level here around 25.64 is a very important level because this is the lower high that made the current low. And as long as price trades below it, I believe we're still sell bias. But ideally what I'd like to see this week is price leaving this area just for a period of time with a strong push phase and then coming back to retest 24.81, creating that lower high that will fall in line with this downtrend and then looking for continuations back to the downside. If price starts to break close above this level, I'll just hold off until further notice. And if price starts to pull back around 25.62, then I may look for a retest of this level as a double top and then a continuation back to these lows. But as I said, as of now, my first plan, my plan A, is just to see price leave just for a period of time and come back to this retest level at 24.81 for a continuation to the downside. So the next pair that we'll take a look at is USD Jpy. Now we can clearly see that the structure has been trending to the upside for a very long period of time. We've had a very strong indication of dollar strength, or at least the recovery of the dollar. But we're seeing with some of the yen pairs a lot of consolidations, especially on like Euro Yen, Euro Pound Jpy. And this might be an indication of an exhaustion of these structures. Now it's not confirmed until price does start breaking some of these key levels, but as you can see here, for the first time in a very long time, price has finally broken this brick wall. This is an indication of sellers in the market. If we don't break above 109.23 or in and around this area and we start moving to the downside, then we can start to anticipate a reversal. And confirmation of that reversal will be a strong break close below a major level in the market. So ideally I'd like to see 108.28 being broken first, and then I'll be looking for a retest of that same level for a continuation back to the downside. In terms of buys, if you are looking for buys, you're just simply looking for price to break close above some of these structures here in anticipation of this trend continuing to the upside. So we'll first see the higher high, then the pullback, retest, higher low, and then you'll be looking for a continuation. At the moment, I'm not sure what to think about the markets in terms of currency strength. I'm only going to go with the technicals and what I can understand and read from the market structures. And for now, this is what I'll be working with. The next pair that we'll take a look at is Euro New Zealand dollar. Now, this structure has been ranging for a very long period of time, since the 26th of February. So we've been in this range for a very, very long period of time now. I personally would say that with the overall sentiment of this market and the way price is making lower lows and lower highs, I much prefer to look for the sells, which will be the break below 65.43, just simply because I feel it's more bearish than it is bullish. I could be totally wrong, and if I am, that's completely fine. I'm not buying off of this key level either way. I'm just going to be waiting for price to break above 67.19 and then looking for a retest continuation. But whilst I'm observing lower lows and lower highs being formed, or at least lower highs, I'd love to see a break of 65.43 and a retest, and then looking for a clean move back to the downside around 63.47. And that will be the idea behind Euro New Zealand dollar. Next pair we'll take a look at is Euro Aussie dollar. So we're starting to see, based on the structure here on Euro Aussie dollar, that the euro is not showing too much signs of strength, just like we did with Euro USD and Euro New Zealand dollar. With the structure at the moment moving sideways, the only plan of action really that I would like to follow through with this week is sells below some of these levels here around 53.70 for clean targets back down to some of these lows here at 52.65. Now, if you're an intraday trader and price starts to break above some of these levels here around 54.25, you could look for some buys back to some of these highs here at 54.67. It's a 40 pip range. There's definitely opportunities if you're an intraday trader to look for those buys, and if not, then you'll just be patiently waiting for 54.67 to be broken, which increases your range by double. 80 pip move back to 55.43, and that's the only time I guess I personally will be buying from a higher time frame perspective. From a lower time frame perspective, you have a 40 pip range here. If you want to be safe than sorry, just wait for the break of the majors. And if you're looking for continuations of these structures, which is clearly sell bias at the moment, then you'll just be looking for breaks of 53.66, then to look for continuations back to these lows as a 106 pip target. The next pair that we'll take a look at is Euro USD. Now here again, we did see strength with the dollar. We're now starting to see that fizzle out as we have seen across the board. I'm not sure what to say yet with this structure. I can't say that I'm fully buyer bias on it yet, which means I'm not going to be buying at some of these retest levels that you might think are higher highs and higher lows. I'd much prefer for a trend to be confirmed first and then take retests of previous higher lows. But at the moment, I'm seeing more sell pressure across the board with confluences from Euro Aussie dollar and Euro New Zealand dollar. For that reason, I'll be safe rather than sorry. And I'll wait for price to break some of the major highs at 1986, then just to look for retest back to these highs. It's 116 pip or 111 pip move back to some of the majors. So it's better to be trading in cleaner ranges than it is to be trading here. And based on the overall consensus of what I see with some of the other currency pairs, I think the sells below some of these key levels here where the higher low has been formed but not made the higher high at 1913. I'd really like to look for a retest sell back to some of these lows at 1837 for a 73 pip range here. I'm not too concerned about this level here, just in case you're thinking about it, around 1874, because I know if I get a sell from an intraday perspective, I can lock my trade in at break even, and then we'll hold it to some of these lows if it does continue down. But that's kind of the idea behind Euro USD this week. Aussie Dollar USD, again, we're seeing signs of Aussie Dollar strength, we're seeing signs of USD strength, and based on that, you would expect this to continue to move sideways. Now, the market was trending down, making lower lows and lower highs. We've just broken above some of these structures here to indicate bullish sentiment. And I would say that this level should hold for buys, meaning that if it does break, I would definitely be looking to sell it back down to 76, 77. Nice clean traffic all the way back down. If it holds it, I'm not looking to buy it at the moment. I prefer to get an overall directional bias this week, or at least a currency strength, to identify that, let's say the dollar is strong, the dollar is weak, Aussie dollar is strong. So for that reason, I'll just be waiting for a major high to be broken first at 78.33, and then looking for continuations back to this previous area in the market. Now, you could ideally target some of these highs, but to be safe rather than sorry, I prefer to target a level where I know price could react to, whether it's a major or a minor level, lock that trade in at break even, and then target some of the major highs if you want to hold on. For now, this is not the cleanest of structures, but that's how I gather the information here on Aussie Dollar USD. The next pair we'll take a look at is New Zealand Dollar USD. Now again, same consensus, not seeing any signs of dollar strength. We're not seeing too much signs of New Zealand dollar strength, and that would ideally, that would illustrate to us why the markets are creating the structures that they're creating. 1 minute we're in a downtrend, the next minute we're breaking structural highs, and then the next minute we're moving into ranges or consolidations. For that reason, I'm just waiting for another consensus of either bullish strength or bearish strength, and then I'll just look to take a trade back down to some of the major highs or lows. First will be a sell at the break of 71.61 for continuations back to some of these lows here at 52 pips. If you're trading on an intraday basis, you'll be easily getting a 5 to 10 pip stop loss on this pair. And if not, you'll be looking for breaks above, let's say 72.35, and then retest back to some of these highs here at 72.99 for a 60 pip move. Again, easily getting a 7 to 10 pip stop loss range here to target 1 to 2s, 1 to 3s, and even 1 to 5s in some instances. Final pair we'll take a look at is gold. Now, the only thing that I'm seeing with gold at the moment is that the dollar is not as strong as it was last week or the week before that. I'm starting to see reversal signs where prices breaking structural highs, indicating bullish sentiment. At the moment, I think my first plan of action is this break above some of these key levels here at 1737.84, and then looking for a continuation back to some of these highs here at 1758.82. Now, the overall structure is showing bullish sentiment. We're making higher lows. I just want to see the higher high being formed, and then we have like 119 pip range back to the upside. That's not too big for gold, but from an intraday perspective, if you can start to identify the trend, the higher lows, the double bottoms, the break and retest, whatever it may be, then you can definitely look for some targets to these highs. For the break of the low, I mean, the market's going to have to do a lot this week to get down there. It will have to break 1700 first. then I have to retest and then see the continuation back down to 1680. I think for now I'll stick to buy bias and then reevaluate maybe midweek. But for now, that's the overall bias of the market. I'm not getting any indication of dollar strength, pound strength, euro strength, yen strength. Right now, the market seems to be in a little bit of a pickle with the directional biases. I think for now, just wait patiently, always wait for your key levels to be violated first. Then find your confluences, looking at other currencies, other currency pairs, and then look for your retests and your continuations. For now, this is the analysis. We'll give you an update on my trading midweek, family. I just want to wish you all a great week. Stay patient. If it doesn't happen this week, it will happen the week after. If it doesn't happen the week after, you still got a very long year ahead. So just stay patient. But as always, say, if you enjoyed this, smash that like button for me so that I can just continue to do these videos for you, and you can share this with others. Subscribe if you haven't, turn on notifications, and until next time, continue to trust the process.